Hello, good morning. Morning, everybody. Let me know if you can hear me. I think everything's working fine this morning. We've got, as it happens, isn't it? Always the way with a bit of technology and stuff. Turned it on this morning and it started the automatic update. So a little bit later this morning, but you know, that's the way it rolls. Good to see you guys on. Morning, Alison and Brendan and Jeremy, Abdul, Stephen, Laura, Nigel. Fantastic. Sharon, great to see you here. Hey, got a few questions from yesterday's Wealth Coffee Chat about the asset protection, and I thought I'd do a part 2 today. There it is on the screen, part 2. Let's do part 2 today around the company and trust structures, because it's always a little bit confusing, this one. So stick with me. We're going to talk about company, trusts, asset protection, whether it actually works or not, and we'll talk about that. You might be surprised in a minute. So anyone who's new, Jason Witten's my name. It says it down there, and welcome to Wealth Coffee Chats. It's a podcast too. If you miss it, you can download it or listen to it on Spotify or iTunes or whatever it is, and happens each day, around about 8:05. Sometimes a little bit later, but usually between 8:05 and 8:10 we kick off and usually have a bit of a chat, about 15 or 20 minutes. 20 minutes conversation, chat, wealth coffee chat, matter of fact, about property investing and investing in general. I've been investing over 20 years in the real estate space. That's my experience, that's my technical training, and that's my passion. I love it, I enjoy it. And I've done well out of it, and each day we get to hang out with you guys and teach a little bit about what I know. And also we've been coaching property investors to build their portfolios extremely well over 18 years as well. So that's a little bit about us. If you're new, give us a shout in the chat. We've got someone who's coming in as Facebook user. Sometimes Facebook does this. Starting work late in Melbourne today, so you can join live. So great to have you here, whoever you are. So today, part two of asset protection. Okay, been there, done that. Got the T-shirt. I like it, Alison. This is our new T-shirts. We've got some merchandise coming our way for here at Positive. Anyone who's in the mentoring program, you know, our underlying foundational piece is about people, place, and planet. We love helping people. We like the idea that real estate improves places that we live, makes it healthier, and we want to make sure we take care of the planet. If you guys don't know, on the Wealth Coffee Chats, if you're not in our mentoring program, we do 2 initiatives that pay our economic well-being forward here at Positive, and we help educate others around the world. We've built 16 schools. Over 7,000 kids go to school every day through our schools and are educated, which is amazing. I love education. And the other part is we contribute to replanting a forest. It's called the Big Scrub, and make all of our properties that our investors invest in carbon neutral or even carbon positive. So anyway, there you go. Away we go. So yeah, Alison, keep an eye out for the T-shirt. But listen, folks, what do we want to do on part 2 today? Yesterday we talked about companies and trusts at the end of our chat about asset protection, and we'll get onto that in a minute. Let's do like a little 30-second recap on what we chatted about yesterday. Asset protection for property owners under the PAYG world, basically owning a property in your own name. So you as Bob or Mary or Alison or Chris or whatever it is, you own it, and according to the ATO, the owner is Alison Newman, right? And so how can you as a person protect yourself from any unplanned events? Well, that was insurance. Important to get the right insurance, both property and personal insurance. The right property manager who runs the property well for you, and you can protect yourself via debt processes, right? You know, we talked about it yesterday. No cross securitization, no cross collateralization, offset accounts and redraws and buffers. Okay, and then the other one, which Alison brought up, was like the quality quadrant, right? Quality location, quality property, quality tenant, quality property manager. Okay, so that was the PAYG world, and had a couple of questions yesterday at the end of our conversation about companies and trust structures, and I thought I'd dive into that one today. And why did I say at the end of it, big no-no, big massive no-no, no need, or very, it's very unlikely that you as a PAYG earner would require or need a company or trust structure for asset protection or property ownership in general, in most circumstances, okay? And this is, you know, there's a little bit of a balancing act, but we're going to talk about that today as we go forward. So that's the little recap, folks, about where we are, about part 2 of the world of company and trust structures, okay? Some of the challenges we get, or some of the questions I've been asked about company and trust structures yesterday was, what if that's a trust and this is a company? And this is often a suggested setup, and we'll do a company itself in a minute as well. But let's chat. So I had a question yesterday, and I can't remember who asked it. I'll go and tag that person in this one today. If you're here, give us a shout out in the chat. But there was a question about, if I get sued as an individual, as a person, right? If I get sued as a person and I've got some challenges in that space, doesn't company and trust structures protect me? And the answer to that is a little complicated, but the answer is, well, it depends, and most likely no. Most likely no. Okay. In company and trust structures, what are the things that you might be concerned about? Okay. If you're going to get have some challenges and problems from an asset protection point of view in company and trust structures, what are the major problems that you guys might think that might occur? Tell me in the chat right now. Give us a little bit of feedback. The first one was, what happens if something untoward happens? Now, this is very rare. Listen, folks, like, I've been doing this 20 plus years with coaching people, and I can count on one hand 7,000 plus clients across Australia and New Zealand who've been sued for their properties. Okay, or sued because a tenant fell over or whatever. You know, a tenant fell over should be covered by insurance. But tell me in the chat, what do you guys think? Other than being sued, what are the things that that people sort of say, oh, you know, what do I need to protect from? And there's two that I hear all the time when it comes to companies and trust structures. Chuck them in the chat if you think you know, or some you've heard of, okay? Now, there's two of them. The first one, I want to be protected from the banks, okay? Job loss, yeah, Brendan, yeah. What happens if I lose my job? Yep. Any others there? Any other suggestions? You know, banks will connect that in a minute to job loss. Like if I get sued, if I've got some financial troubles, job loss, I've got to be protected from the banks. And the other one, unfortunately, is I've had this question a number of times. You know, like I want to keep my assets away from a partner for some description, divorce. You know, I'll put it in a company trust structure. So, ladies and gents, here's what I can tell you. All right. Companies and trust structures, no. The laws of the land see right through companies and trust structures. especially if it's just you. It gets more complicated if it's multiple owners and stuff like that, but it's you. It's Bob, Mary, Jane, Sharon, Chris, whatever it is, and you're saying, I want to keep it away from another person, and I'm going to own it in a company trust structure. You get divorced, the courts of the land, they look straight through that. There's no protection, okay? Now, as far as I'm concerned, I think that's pretty low act to be trying to do that, but, you know, I'm just letting you know what the facts are. If you've got children, you should be taking care of them. Anyway, that's my opinion, but I'm not here to espouse that one today. All right, at the end of the day, number 2, banks. If I've got a company or trust structure and I can't pay the bills, I'll be protected from the lenders. No. What happens, tell me folks right now, if you have ever borrowed from through a company or a trust structure, what happens to the director of this company? The director of that company, or down here we have what's called beneficiaries, or at this level, that might be an individual person. Sometimes it's a company, sometimes it's an individual person, and that person's called a trustee, okay? What happens? What does the bank ask for when you're either a director of a company that's borrowing money, which is a company trust structure, or you're the trustee of a trust? What does the lenders ask for? What do they ask for, team? Do you guys know this one? Some of you might not because you're not exposed to company and trust structures, but they ask for what's called PGs, personal guarantees. So we're like, oh, well, I'll whatever misunderstanding, misinformation is there, company and trust structure protects me from a bank and lending if I can't pay. Morning, Hardick. Morning. No, you won't lend money through any structure in any way, especially when it comes to real estate, unless you have a personal guarantee. So the director and the trustee are on the hook anyway. Okay? These two, you do not get any protection whatsoever. Okay? Zero. Okay? The other one up here. What happens if I get sued? Okay. So let me give you two bits of feedback in this section. If you own real estate, let's say you own a property over here in your company and trust structure, you are the director or the trustee, okay? You're in charge of this, okay? That's very clear, okay? If you get sued, what happens is someone might sue the trust or the company and they would join you as the trustee or the director because you're meant to be in charge, okay? There is a small amount of protection in there for you, but at the end of the day, that asset can be taken away from the trust without you being part of that process, all right? That can happen. Now, it's very rare, like I said before, in this real estate investing place, I haven't seen this. Gee, folks, it's so rare it's not funny, right? So there's this kind of fear-mongering out there like, yeah, you're going to get sued by these terrible tenants, you know, put it in a company trust structure. The worst frigging conversation I've heard in forever. It's a bunch of bullshit. So can you be protected? A small amount, but if you break the law, let's say this, let's say you didn't or wouldn't fix. I'll give you a real example where I've seen this. In Queensland, it's law to have fire alarms in your properties, okay? Fire alarms in your properties. Now, you have to pay money, it's thousands of dollars to install them. Some landlords are like, I'm not doing that, I haven't done that for 20 years, I'm not going to start now. They don't install the fire alarm. The house burnt down. Nobody lost their lives, but there were some injuries. So now the landlord is going to be sued and got sued, right? So There is no protection when you break the law, ladies and gents, folks. If you did the wrong thing, it's irrelevant if you own in a company, trust, or whatever. All right? Not going to happen. Not going to happen. Zero zippo protection in that space. Okay? So the protection can happen here if you've got some other interests which have nothing to do with the real estate. Let's say you did a business deal that went wrong and someone tried to sue you. They can't now go and get the properties because technically you don't own the property, okay? So that is something that can happen. But lending, no, you're not protected in any way. You're not protected from partnership breakups in any way, especially marriage partners or life partners or that sort of stuff. And if you break the law, if you don't fix your property and the tenant breaks their leg, it's irrelevant, okay? So hopefully you guys are following along with this stuff. For me, for most of you guys, when it comes to asset protection, our conversation yesterday about the asset protection triangle, insurance, property manager, and debt, that is absolutely rock solid when it comes to protecting you and your family and your wealth. So make sure you get onto that, okay? At the end of the day, for company and trust structures, the problem, the challenge, let's have a look at this just quickly as we go along. Let's have a look at owning as an individual and owning in a company trust structure. Okay, so what are the things that we want to manage the cost of when it comes to owning property? What are the taxes we want to manage, okay, as we go? So number one, we want to manage our PAYG tax. For most of you guys, most of us, if we've got a job, PAYG tax is a problem that we want to manage, okay? So how do we do that, right? Number two, we want to manage another tax in this space, which is capital gains tax, CGT. We want to manage another tax, which is land tax, as we go along. You guys know these ones as we go. So let's have a look at these three things, and then I'm going to put down here the cost to administer this, okay? So this will blow your mind, right? Okay, so PAYG. So let's go over here. Number one, can you get PAYG? Can you get PAYG? Can you get PAYG? Can you depreciate the property as a PAYG earner, someone with a job? And can you get a tax deduction when you own it in a company trust structure? The answer is no. You cannot get personal tax deductions as the individual, even though you were on the bloody hook for the lending. It's ludicrous, it's stupid. If you own that property in a company trust structure, you can't claim depreciation in your personal name, right? So no tax back when you own it, right? Capital gains tax. Now, capital gains tax after 12 months is actually fine. So there's a tick in the box for that one. Okay, it's the same for as an individual over here. So number one, number two, number three, and number four. So let's have a look at this. Over here, boom, tick in the box. Amazing for minimizing your personal tax and increasing your cash flow, owning it in your own name. Over here, capital gains tax treatment after 12 months is exactly the same. No difference between individuals as we go. And there's a small argument. There's a small argument for trusts as you get to properties sort of 7, 8, 9, 10. But for the first 5, no. All right, let's have a look at this. Land tax, okay? No threshold. Ladies and gents, properties owned in a company trust structure in many states of Australia have a 0 threshold. So from the moment you own it, you're paying land tax. All right? Okay. Over here, you get a threshold. If you own properties in your name in the right way across multiple states, you pay 0 land tax. You guys know this one, right? Okay, over here, let's have a look at now. This is one which what's called the cost to administer. This thing here on top of your personal tax return, right? So let's say your personal tax return costs $1,000 a year, no matter what, right? For you as an individual, now you've got to pay for tax returns for a company and a trust. Okay, so that will be easily, not only will the setup of this cost you probably $3,000, but it will now cost you $3,000 a year to administer and maintain. $3,000 a year. You times that by 10 years, that's 30K. 30K to own a property in a company trust structure, which you can't get depreciation, right? You have no land tax threshold, okay? And the cost / lending, let's just do this. I'll put this cost / lending. You can lend money in here. Absolute rubbish, right? The banks hate lending in these structures above 80%. It's almost impossible unless you're in the medical industry, a doctor, right? And over here, happy days. Individual, killing it, crushing it, okay? So for me, you know, what happens, just check this out, folks. Like if we do the quick math just before we finish up. The mathematics of depreciation, just an everyday property for someone on about 100 grand would be able to get back $3,000 to $5,000 in real cash every year. So let's just call it 3,000. Let's just add up the dollars over 10 years. So we've got 30K in depreciation locked up in here. You can use it later, by the way, okay? But it doesn't come out to you as an individual. It has to stay in here. And then you have to sell this property to have any gain on that, or the property has to kick into positive cash flow in 10 or 15 years' time. No benefit today. You've got another $30,000 worth of problems when it comes to the cost, all right? So the downside could be $30,000 to $60,000 of real cash, folks, that you don't get to use, or you have to put here as a difference in your own name, okay? So hopefully that makes sense. For some of you guys, if you're in the world of PAYG and you've got a job, companies and trust structures are just not appropriate for your situation. Now, if you could wave a magic wand and in 20 years' time, if you could put up with all of this cost and problem now, in 20 years' time, there might be some benefits of being able to split capital gains in a certain way and other things. But, you know, 20 years' time, you'll never get there if you get bled dry, you know, literally tens of thousands of dollars a year as a PAYG earner. It's not going to work. All right, we've done this 1,000 times, folks. Anyway, hopefully that makes sense. Anyone got any questions? Chuck them in the chat. Brendan said, can you get some insurance contacts? Brendan, the best connection, you're in the mentoring program, mate, put that question in the Facebook group and connect with our property managers, Cass and Emma and the team, so Positive's property managers, and they will tell you the best insurance for property stuff, mate. There's a couple of good ones out there, but it does depend on the type of property you own and where you own it and so on. There's 2 or 3 good ones that we use constantly. So, mate, whack that in the chat and away you go. Yeah, Terry Shearer is one of them, Hardick, and there's 2 other companies that actually are quite good, and sometimes Terry Shearer's policies got a little bit beat up over COVID time. Yeah, just check in on that one. Anyway, folks, Yeah, Carol, good question, Carol. Carol just asked, she's got an investment property in a family trust already. Is it worth putting it in your own name or selling it and buying something else? It's a big question. It's a good question, Carol. And often the answer is yes, it is worth selling it and restructuring it if it's causing you cash flow issues, Carol, right? So, if that property's positive cash flow, and it's making 10 grand a year in cash flow straight off the bat, pre-tax, then, maybe it's worth keeping now because it's done the job, done the work. The problem with those properties, Carol, is you getting equity in those properties and getting the tax benefits now as an individual is very difficult for you to make the most of the assets you have. And sometimes, even though the property is doing well, it's actually holding you back from buying a second and a third and a fourth because it's complicated and the lenders don't like it. So, Carol, what I would suggest if you're serious about getting an accurate answer to that question is reach out to your coach. And if you don't have a coach, you need one. Get a coach who knows what they're doing and go through those questions, because that can be $1 million questions right there, Carol. That could be 2 more investment properties if you unlock your buying power. If you unlock your equity, you unlock your potential. Or it could be no more properties, and in 20 years' time, that could be worth millions of dollars to you. So it's a good question, and I'm glad you're asking it. And I encourage you to seek out the answer, the exact answer for you. Okay? Hopefully that was useful, folks. Anyway, we've gone over time a little bit today. Got a bit excited. You guys are awesome. Thanks for joining me. Wealth Coffee Chat done and dusted. Get on to Vicky. Nice one, Carol. Done and dusted. Thursday, 9th of December. Crikey, it's December, folks. Yeah, we're here. All right, that's it. I'm rabbiting on. I got to go. You guys got to go, I'm sure. Good to see all of you guys. Thanks for joining. Thanks for dialing in. Great to see you. And see you tomorrow around about the same time, 8:05. Adios, folks. Happy Thursday to you, Hardik.